Okay. I think I figured it out. Um, so with this trade that we did on Asia session, we like fucking literally bottom and top take the whole shit. Um, what I was looking at is this, right? So we see step one, sweep of liquidity, right? Boom. Then we see, so right here we see sweep of liquidity. Then we see a break of structure, right? High formed here. Sure, I might come down and come push even lower, but we see a break of structure here. Boom. High, break of structure. Boom. Closed above that high. Okay. That's your confirmation. There's no inverse fair value up here, but we got a high. We got a break of structure. Then wait for continuation confluence, a fair value gap or equilibrium, right? So if price comes into this fair value gap, which it did right here, boom, on the 5-minute, boom. What is this? 950 came in here and then closed above, respecting the fair value gap. So now we can scale to the 1-minute. Where's that 950? Right here. Oops. This candle open and then 955 would be boom right here. So price, this whole range, price came down here right here on this candle, right? And then we want to wait for our 1-minute confirmation, right? Our break of structure, our inverse fair value gap, our 79% extension, whatever. I think I just got impatient and I saw this candle close above. There was like 5 seconds left on this, and I saw this candle close above this fair value gap, and I went in. I just bought, and I put my stop losses below down here, and I went for a 1 to 2 risk reward. And yeah, buy here off this, which I knew was going to be, because if I had waited for a break of structure or an inverse fair value gap, there's one here, like this one, or I guess this is an inverse fair value gap right here. 1, 2, 3, shing, and then inverse that. No, we didn't. Yeah, we did, because this is the gap. This is your gap. Filled all with buy orders, and then boom, price took off. But if I had waited for a break of structure, up, down, up here, close above, I'd have to buy here, right? And what would I have done? A long position at a 1 to 2. I would have put my stop loss below the lows. I guess I could have done these lows. If I was being safe, I could have done below these lows. That's 16. It's like 32 points. Yeah, that would not have worked. That would not have been good. But I did a stop loss on, I bought here. It was literally 1 to 2. It was like down here, 10.5, 20 points up. Boom, literally right here. Which candle did it act? Yeah, it sold on this candle. So this one close here. Yeah, where is 1.9, 1.95? Come on. 2.5. It's like right here. 2.2, whatever. That hit. 1 to 2 risk reward off our TJR strategy, right? Now, did I get impatient? Yeah, I think I did. Right, but I just price respected the fair value gap off this, and then I figured it was going to close above, so I just went for it. Now, is that bad in this case? I would say yeah, because I'm still learning. However, it worked. Fucking straight 5 green candles in a row. Price went straight like magnet toward my stop loss, targeting previous areas of liquidity, which is up here. Boom. Take that every day of the week. And it fit perfectly in with my 1 to 2 risk reward off where I was. So that was a sick trade. Literally bottom to top take. I made I only risked 1 unit. It's like $1,000. Now if I had done this though, waited for this candle closure to actually break the structure, and I put my stop losses like below these lows in this fair value gap. This one's been filled. This imbalance has been filled already. This is the 5-minute fair value gap. It's already been filled. So, am I audio on? Oh my god, no way. Where's the audio? This better have been fucking working the whole time, or I will lose my mind. 7 went 14. Yeah, this would have hit too. Yeah, this one would have hit too if I had done a stop loss below here, because that would have been sick. 1 to 2, 1 unit, pretty much the same thing. Which is, you know, less than losing all this price action, but that was a fucking sick trade that I took. Buy low, sell high, literally perfect trade. But now we have London session open, 5-minute orb. Price breaks out to the downside. Let's see if we have any confirmation confluences here. So, bit of a downtrend here. Are we sweeping any sort of liquidity? Maybe these lows, maybe all these lows, right? We're sweeping these here on the 5-minute, which is nice. Right, we need to see a, oh, here we go. Straight up inverse fair value gap. That's our confirmation confluence. There's potential for liquidity to be swept here. Inverse fair value gap. Now we need to wait for a continuation confluence, which will be a, no, that's our confirmation, right? Now a continuation will be fair value gap or equilibrium. Wait for price to come back into a swing low or swing high. Right? Price comes back down in here. Because even though its fair value has been inversed, let's just wait and see what happens, you know? Let's go on the 1 minute, see what's happening. Right, filled. Right, price got respected here. Come down, break a structure off this. High, close above. Right, and then if we did this on the 1 minute, we're waiting for us, so like sweep right here. Close. Sort of confirmation. So break a structure here. Fair value gap. No fair value gaps in the vicinity. Right here, there's one. Already got filled. We really want to see another one. Right, and then we'll see what happens here. But we need to be on the 5-minute for that, because that's how the strategy works. So this little tiny fair value gap got straight up inversed. This high to this low. Right. I guess if price even breaks out of the orb opening range. What the fuck is that thing? Jesus. There's a moth in my room. Open range breakout. We have a fair value gap forming here, which is perfect. Right? So this is also your confirmation that orders may have been filled to sweep. Now we want to see price come back into this, right? Maybe in another couple minutes, price comes in, respects it. Then we need to see a break of structure or an inverse fair value gap on the 1 minute, and then we go hard. We go buy, and we target previous areas of liquidity. Could be up here, could be up here. Targeting a 1 to 2 risk to reward ratio, if possible. So I guess I'll see if something like that happens. Okay, back on ES here. So 5-minute, let's look at this. 5-minute fair value gap, right? Boom, right here. This, we're looking for, we've already swept liquidity over here. Possible that it wants to come to this, but we've already swept this, so there's potential for the sweep right now, right? We see price come up, we need to break structure here, right? We need a break of structure for our first confirmation confluence, right, on the 5-minute. And then we need to see a continuation confluence, a fair value gap get hit and respected, or price to come into equilibrium, right? So it needs to come, we need a break structure of this, price will probably come up and then come back down. Here, I'll show you. Here's what I'm thinking is going to happen. Price is going to come up, right? fill this imbalance, hit equilibrium, 1 minute, break a structure, go, or price is going to break structure here, right? So that's our first confluence, and then it's going to either form a fair value gap like right in the zone or even up here, come back, fill it, right? And then if we go scale to the 1 minute, see a break of structure out of it, then we go. That's what I'm hoping for right now. But only time will tell with what's happening with that. Oh shit. So I was going to, because price needs to fill this imbalance before seeking external liquidity, right? Even though it kind of did, right? I was considering putting a buy into this because we see, look, we see a fair value gap here. This fair value gap respected. I think we could go for this. I think we could actually go for this. This fair value gap just got respected. I think we can go for this, something like this. You know, put it below. If this goes below this fair value gap, we know we're fucked. We know we were just straight up wrong. Create limit order. We're just gonna do 1 unit, right? We're just gonna go for a buy right there. Because on the 1 minute, right, we've broken structure and we've respected this fair value gap, and we need to fill this 5 minute imbalance, right? And even still, even if we just straight up inverse this, that's even better. And then we see a 1 minute fair value gap fill, or a 1 minute break of structure. No, 1 minute inverse fair value gap. So we'll see. Here's, let me draw it out just so everybody gets what we're doing here, right? Liquidity, right? Sweep. Okay. Now we need to see. Let's say we have a fair value gap here. We need to see again straight up inverse, a closure above it, right? And then that's on. This is all on the 5 minute, right? 5 minute on that, and then we need to see a 5 minute fair value gap for equilibrium. So we come up here. Price is still coming up, right? Let's say there's a high here. This is our swing high to swing low. Let's say this was the middle line. Price either needs to come into our equilibrium or fill a second fair value gap that gets formed right here. Either fills this and goes up, or it fills the imbalance. Let's call it like this, right? Either fills the fair value gap, respects it, or it fills the imbalance. And then we scale to the 1 minute. We see a break of structure or a fair value gap inversion, right? Bearish, bullish, right? Oh my god. Fucking, there's just a lot of shit on the screen right now. Right? We'll see, let's just call this line the equilibrium. Put it like right here between the swing high or swing low, whatever. Right? We'll see price come in, fill equilibrium, boom, go up. Or let's say we have a bearish fair value gap and then a straight up inversion off that on the 1 minute, and then we go up. Sorry. Sorry. Hold on. Hold the thought. Before we do anything, let's just restart this. Okay. Boom. Liquidity. Sweep. Potential for liquidity sweep. We have a fair value gap right here, right? Price inverses it on the 5 minute. Sweet. Right? Price is going to continue up a little bit higher. And then, let's say we have a swing high and a swing low right here. Let's call this the equilibrium. Price either needs to hit equilibrium and then we scale to the 1 minute and we form a bearish fair value gap here, right? Because this is on the 5 minute, but then when we scale to the 1 minute, we'll see 1 minute fair value gaps in this zone. So whatever this is, right? Even if this isn't a fair value on the 5 minute, it could be on the 1 minute. And then we see a straight up inversion off of that, then we can go for a buy. Okay? However, let's say fuck the equilibrium. Let's say we form we form a bullish fair value gap here on the retracement. All right? Even before that, let's say So yeah, boom. So inverse fair value gap. That's good for confluence 1. Or just a straight up high break of structure, right? That's also good. This is like difficult to do. This is hard. So look, 5-minute time frame. Confirmation confluence is either inverse fair value gap or break of structure. Oops. So look. Sweep liquidity. Okay. Fair value gap, inversed. That's good for step 1. Or liquidity, high, break of structure. That's good for step 1. Okay. Or 79% extension, whatever. Okay. Now for step 2, we need to see a fair value gap get respected, right? For a continuation confluence. So let's say we didn't have a break of structure. We're always going to have a break of structure, right? Let's say we formed a fair value gap right outside of the liquidity sweep. Price will come back down into that and then continue on upwards, right? It'll respect this fair value gap. Okay? That's good for step 2. Or let's just assume we're always going to have a break of structure. Let's say there's no fair value gap, but we mark out the swing high to the swing low and we put in an equilibrium. There's no fair value gap, but price comes into the equilibrium and then continues higher. Right? Even before that, even before price continues higher, let's just say we see price come into the equilibrium. As soon as this happens, as soon as we see the fair value gap get respected, right, we scale to the 1 minute. So here's step 3. Boom. Okay. Let's go with the fair value gap example. We form a fair value gap on the 5 minute and it gets respected. Now we need to wait for on the 1 minute, right? So this is all 5-minute shit. Now this is 5 minute, now on the 1 minute. Now we need to see, right, price is going to chop, it's going to come down. We need to see a fair value up here, straight up inversed. That's good for step 3 on the 1 minute. Or we just see a straight up break of structure. That's also good for the 1 minute, and then we go. So it's kind of hard to draw, but because it's multiple different scenarios on the same step. So let's text box this out. So 5 minute, right? Liquidity sweep, right? We need to see an inverse fair value gap. So, right, down, and then a straight up banger to the upside, right? That's good for step 1. Or just a break of structure. Then, right, then we go to, oh my god. Then, for step 2, continuation. Right, it's going to be fair value gap or EQ, equilibrium. So, for step 2, right, let's say we already have our inversion. Boom. Now price is already broken structure off that. Now we want to see a fair value gap get respected. So let's say price comes up here, right, forms a fair value gap, price comes back down and respects it. That's good for step 2. Or, right, let's say we have swing high, swing low, price comes up, comes back down into your equilibrium zone. Let's say there's no fair value gap and price respects it. That's good for step 2. Now, step 3 is scaled to the 1 minute. We need to see a break of structure, an inverse fair value gap, or 79% extension. So, same example, right? Boom, sweep of liquidity. Let's call this the fair value gap inversion example again. And then we scale to the 1 minute. So price is doing whatever, right? We don't have to use any of these 5-minute confluences anymore. We just need to see, let's say we see on the 1 minute, 2 or 3 minutes later, we see fair value gap get straight up inversed. Boom, good to go for step 3. That's your entry. Or we just see a break of structure out of this on the 1 minute. That's good for step 3, enter. Boom. Boom, boom, boom. We got that. That's what it is. So I'll find examples on the chart here in a second. Okay, we're gonna use just the example that we're just using the trade that I took today, right? So we're on the 5 minute, right? We are sweeping lows. Boom, sweeping lows, right? We see this tiny little fair value gap right here. Doesn't matter the size, it's a fair value gap. Boom, straight up inversed. Also, breaking structure here, closing above this high. So that's both of our confluences minus 79% extension. That's both of our step 1 confluences done. Okay, now the next, right? Now we have this fair value gap right here. Whoops, that's the wrong thing. God damn it, come on. Now boom, right? Step 2, fair value gap or equilibrium, right? Let's call this swing high to swing low or equilibrium, right? So we have both of those, right? Price comes into this fair value gap, respects it, right? We're not seeing any inversions on this, and price is down in the discount range. So boom, okay? Now that's both of our confluences done for step 2. We only need one. We literally only need one. So now what do we see here? Now we see this little fair value gap again, doesn't matter the size, this little fair value gap, boom, straight up inversed, and a break of structure. Now I didn't wait for this, I saw this inverse and I just straight up bought, which was me being impatient, which is something that is not right to do. But boom, in fair value gap, bearish fair value gap, overcame by bullish buying pressure, inversed. All right, and now what I should have done is waited for this high to get taken out right here, bought at this candle closure, so I have both confluences for all 3 parts of my strategy. And then I should have waited for this candle closure, buy, put it below, maybe these lows, and risk target previous areas of liquidity. What do we see? I could have gone for this, could have gone for this high. This high would have not been hit, but I went for a 1 to 2 risk reward just so I could get in on the trade. I don't care about bottom taking or top taking, even though I kind of did, right? Go for 1 to 2. That would have been the smartest play. Now, even though we see where I see it, this bullish fair value gap gets straight up inversed by these 3 candles, right? Close below, this one closed below it here, and then we have even more selling pressure out of it. Just wait, just be patient, just wait. Bullish fair value gap or bearish fair value gap, inversed. In this scenario, I totally should have waited for this. I totally should have waited for a break of structure out of that, because we see an inverse fair value gap to the downside and an inverse fair value gap to the upside. So it kind of cancels each other out. But I totally should have waited for this. However, I just got lucky. Bought, price came up 1 to 2. I'm pretty sure my risk reward was below these lows for let's just figure it out. I think it was 10 points. I think I bought Where did I buy actually? How's this trade? This trade is looking interesting too. Whoops. God damn it! I keep doing that. Okay, hold on. Let me find this first, and then I'll look at the trade. I bought on the 58 candle. So let's go back here. Also, I'm looking at this on NQ instead of S&P 500. So actually, that might not even be the case for S&P. I might not even have seen. There might not even have been 2 inverse fair value gaps on that. Where was this? Let's find out. I just realized that. Was there? Right, so this fair value gap here, yeah, I remember this. This fair value gap straight up inversed. Okay, was there? Yeah, there was. See this one? This one also closed well. Okay, so these are pretty much the same. Because I bought this on ES, so yeah, there was a bullish fair value gap that got invalidated and inversed, but same thing. There was also an inversion to the upside. And I bought on the, wow, this is terrible. This is terrible, terrible play. I should have absolutely waited for this inversion. I bought on the 58 candle. I really just got lucky. 58, 58. So yeah, bought right here. Yeah, total. I absolutely should have waited for this inversion. I don't know what the hell I was doing. I think I just assumed it was going to inverse this or break structure. So, because we're literally in a downtrend. What are you doing, Max? We're literally in a fucking downtrend. I just assumed price was going to go higher, and I guess I was right. Maybe that's market intuition. Maybe that's just luck. Who knows? Well, it worked out. Inversion. I absolutely should have waited this inversion, and I also probably should have waited for this breaker structure here. Maybe maybe not even because like I would have seen price coming up, and like if there's 10 seconds left on the thing, maybe price is like right here. Whatever. So boom, perfect execution of the strategy. Um, but now let's look at this trade. So what I'm doing here, I think I just explained this, right? Price wants to fill this 5-minute. Before price can seek external liquidity, it needs to fill its own imbalances, right up here, right? So yes, we slept liquidity, and now what I want to see for real, even though we have a break, there's like so much shit on this screen. Let's get rid of this. Remove that. Okay, so look. Break a structure here. Boom. Perfect. But we have this fair value gap we still need to take care of, right? Because price has not been balanced below this. Once we fill this balance, then price can go ahead and seek external liquidity. However, we have the sweep. So price may want to break structure. Okay, what we want to see is this breaker structure is good. We want to see an inversion off of this fair value gap. And then we want to, if we got to go back, we got to go back, right? We want to see an inversion of that. And then we want to see a fair value gap get respected, a bullish fair value gap get respected, or price to come back into equilibrium, right? Once the bullish fair value gap gets respected, or price comes back into equilibrium, or both, then we scale to the 1 minute. Then we need to see an inverse fair value gap, right? We need to see price, on the 1 minute. It may not be like, it's probably like a very tiny one, right? We'll see a fucking thing get straight up inversed, right? Boom. And then we can enter off there by 1 to 2 risk reward ratio, or on the 1 minute if we see a high and a higher high in a breaker structure, right? Because that's confirming that market structure has shifted. This is confirming that market structure has shifted to the upside. Combined with our 5-minute confluences, that's prime time example for a 1 to 2 risk reward winning trade in the direction of order flow. So I'm getting a little antsy, a little preemptive by putting a buy here, targeting the retracement for this fair value gap, but I mean, it's $130. It's 1 unit. It's a $100,000 account. This is like not even. This is like maybe 1%. Maybe no. It's like maybe 0.5% of my risk. Don't risk more than 3. Know how many trades you want to take. But I think this is also a good trade. I think the price has to fill an imbalance. Sorry, price has to fill an imbalance before seeking external liquidity. Not all the time, but just based off what I know, that seems right. So, and this is where daily bias comes in huge. This is London Open. Asian session starts at 6. Okay. So we are okay. So these are Asian session lows, but these are also good lows, and we swept these lows. Even still, we might want to just sweep these lows, fill this imbalance, and then target lower. Target this external liquidity. Right? That makes sense to me. Even though we've swept lows, potential for a reversal. Also, fill imbalance, seek external liquidity down here. Then we get this liquidity sweep for real, and then reversal. So this seems like a pretty decent trade going for the retracement towards this fair value gap, to me at least. Fair value gap here. Now, if this one gets inverse, we're fucked. However, I really think price wants to reach up for this and fill it. I'm really thinking so. So yeah, I guess all we can do right now is wait, and then whatever happens, if we lose this, we can just try again with this if it hits this part, right? Because that's potential for liquidity sweep. Re-implement our confluences, and we'll just see what happens. I was fucking muted the whole fucking time. Oh my god. I hope everything was recording. That's really annoying. Okay, as I was saying, price needs to fill the imbalance before seeking external liquidity. That's how it works. Had I seen this imbalance, if price had respected this fair value gap and continued with bearish order flow, we would have been fucked. However, stop loss below this low, so it's only 130 bucks, 0.1% of our account, whatever. But great trade, great freaking trade. We used what we know, and it worked out, right? Price wants to come to fill this. Look, what we want to see is an inversion of this. So that's a reason to take this trade. What we also want to see is price to come into this fair value gap zone, respect it, and continue with bearish order flow, which both of those reasons would have filled our trade. So that's perfect. Because we win that now, let's say, right? Because we inversed this fair value gap. Oh my god, you didn't. I hope you heard all of that because fuck. Price filled this. Price inverse this fair value gap, right? This is the top of it, closed above. We still have to wait for this fair value gap to. We need to see if price will respect this one because it hasn't been filled. It hasn't been balanced out, right? So as I was saying, if there is a gap, let's say there was a gap between this 405 candle and this 410 candle. If price had balanced this out and then formed this fair value gap, and then we see this inversion of that fair value gap, that is a reason to move on to step 2. We have not completed step 1 of our trading strategy because we need to see an inversion of a fair value gap. And even though we have one here, right, on this candle that closed above this fair value gap, price could still respect this fair value gap because it hasn't been balanced yet. But that doesn't quite matter because our trade was from down here to up here at the bottom of the fair value gap, because we want to see we know price needs to, again, fill imbalances before seeking previous liquidity. But if price had respected this one, respected this fair value gap, bearish fair value gap, and continue with bearish order flow, then this fair value gap doesn't mean shit because price has been balanced from here down, right? We already know that. So boom. But also, let's take what we got. Good trade. Let's move on. Okay. Just making fucking sure we're not mudded on this shit again. So here we go. Let's look. Now this has potential to be we're back on ES, right? This is your 5-minute fair value gap. I'm thinking that we just took this banger trade towards where we want. I pretty much know the story of where price wants to go, right? Price came down, swept liquidity. Boom. Came up, we had a fair value up here, came up. It looks like right now it wants to respect this fair value gap, right? It wants to respect this fair value gap. Boom. And then we see this little tiny fair value gap right in there. Do you guys see it? I see it. Low, high, right? In the next 2 minutes and 10 seconds, if we can get a closure, so price is respecting this fair value gap right here. If another one here, if price closes below, if price can close below and inverse this fair value gap, I think we take a short position, right? Maybe put like this. I think we do this. Short position below. Let's put it like at the body of that candle. Put our stop loss above this at 8 points and target 16. Ooh, that's a little ambitious. That's a little ambitious. I think we do we target like this low, maybe. No, that's dumb. Let's target. If we are gonna do it, we're gonna do it for this low. Price wants to respect this fair value gap, inverse, right? That's telling me that price wants to seek external liquidity. Let's put it right here. 1 to 1.5 risk reward. And price is doing exactly as what I think is going to happen right now. right? Let's go ahead and get in the short position right now. I'm gonna create a limit order. Sell. We're gonna do 1 unit again, just because we're paper trading. It doesn't even fucking matter. It looks like price wants to inverse this. It executed that. If it inverses this fair value gap, that's fine. Shit, I just dropped my notebook. Making fucking sure we're not fucking mudded again. Alright. Look, that's double. That's double, fair value gap respect right there. And it's getting balanced out now, which is perfect. Fill internal liquidity, seek external liquidity. That's how trends move. Right? Oh shit, hold on, this might not inverse. See, that's where getting impatient is bad. Oh no, it did. Close right here below. Yep. This is your fair value gap right here. We got a closure below that. Okay, perfect. I'm thinking that's great. Right? So now the way trends work is price fills internal, seeks external. If it inverses this fair value gap, we're one step closer to getting into our real strategy. Right? We're taking highs and lows. 412 I thought we were at fucking, I did 1 unit, right? Jesus. Right? Okay, but I think I know the story. I think I know where price wants to go, if I'm being honest. Right? Liquidity, I think I already drew this out. Liquidity sweep, fair value gap, respect, forms a fair value gap here, inversed, seek external, buy here, target here, put it above, right? Target, take profit here, stop loss above this, this fair value gap, because if price hits that, that's an inversion, and we're just one step closer to our real strategy, which makes us way more than 1-to-1 risk to reward, you know? So let's just see how this goes. As of now, are we green? Are we green if on this thing right here? Realized P&L 450. Okay, so we were at like, I'm pretty sure we were at like $1,700 realized P&L. We cut that down to 452. Now we're green for the unrealized, but if we win this trade, we're back in the green for realized P&L. Okay, here's the deal. Let's get us back into freaking equity. Let's get our account balance back up to 100 grand, because that's what we want. But this makes sense to me, right? This is how trends work. Fills internal, seeks external. We see this all the time on the 4-hour, right? Shit. Let's get an NQ so I don't have all these drawings on my screen. Set chart view. Remove 12 drawings. Right, on the 4-hour time frame. Let's see here, look. Not a sweep, but we see, right? Price wants to fill this fair value gap. That's not a great example. We're actually writing it down. Here we go, uptrend right here. Perfect. Right? Bearish fair value gap filled. If we see respect, we go down. Let's see a bullish fair value gap, right? Bullish fair value gap here. Respect seeks external liquidity, goes up. Right? Bearish fair value gap. Bullish fair value gap, right? Filled. Oh, look at this. Did that get filled? Ooh, that might be a fill right there. It is a little bit higher. Does that count as a fill of liquidity or fill of an imbalance? It's barely up there. I would call this an inversion because we're closing above. Not only are we closing above here, we're closing above the highs as well. Right? Price continues onwards. What else we got? Here we go. Perfect. Bearish fair value gap. Fills the imbalance. Seeks external liquidity. Boom. Here. Hits. Right? What about this one? Bullish fair value gap. Right here could be a fill. Right here could be a fill. Seek external liquidity. Right here. Boom. You know? Fair value gap. Inversed. Closing above. Goes higher. Boom, of course. Inversed again. Goes higher. Here we go. Look at this. Big bearish fair value gap. Filled. Seek external liquidity down here. Not hitting that one. Right. But let's look at this. Let's look at this. Now would this be this is over the weekend, which is kind of difficult. No, this is on Wednesday. Look, Wednesday. And the next day we inverse it and we continue higher. So I guess my question was, if there are retracements within the fair value gap, does that still count? Because this one breaks below the fair value gap, but then it inverses here and then it continues higher. That's a question I need to figure out. Fair value gap here. Fills, goes higher, no. Fair value gap here. Okay, this is a good example of fair value gap. Fair value gap filled. Okay, look, so perfect example, right? Fair value gap. And then, fuck. Gotta get better at that. Right, fair value gap here. Right, 3 candle pattern, 1, 2, 3. There's no wicks on this, so boom. Right, filled. Now because we filled this one, we're seeking external liquidity. So come down to this low. I would target, maybe this low. Boom, whatever. Because we're seeking external liquidity, and we filled this imbalance, this one now doesn't matter because price has been filled from this point, and we're in a downtrend. Bearish pressure is proceeding, selling pressure is out of this world. So boom, fill this imbalance. Now this fucking thing no longer fucking matters. Get out, go down, right? Boom, right here, inversed, right? Fair value gap, straight up inverse, goes way downtown. To like fucking, what is this? 24/7 to from 25.5. It's almost $1,000. Alright, let's get way back here. Let's figure something out. Let's go this one. Alright. Fair value gap filled. Price seeks external liquidity. Boom! Right here. Fair value gap here filled. Disrespected inversed. Goes higher. Ooh. Fair value gap. Disrespected inversed. I mean, it goes higher, however. Is it seeking external liquidity? These are all-time highs. Oh, no, not even close. Not even close. Fair value gap. Fair value gap. Fair value gap here. Tiny little one here. Inversed. Now we still could respect this one, right? So there's one here too, a tiny one. Inverse closing above. Now this one, right, to the top of it, inversed. Boom, going higher. This one to the top of it, respected, comes down, then inversed. We need to wait for more confluence in here, but inverse off this one here, right? Let's look at this uptrend. Boom, fair value gap filled, seeks external liquidity higher. Fair value gap filled, seeks external liquidity higher. No. Fair value gap. Fair value gap filled, goes lower. This one respected, it goes lower. I mean, yeah, but after it goes way higher. Anyways, let's get back on this. How are we doing? 68. That's just how price works though, right? So we're filling this imbalance, right? And it looks like price is respecting it. This is a fat imbalance. Seems a little bit difficult we don't see that many. Actually, fuck. We're seeing a lot. However, from what I'm thinking, fill the imbalance, respect it, come down, sweep even lower, maybe even sweep these lows. And then we'll see. Wait, hold on before we delete this. 1 to 1.5 risk to reward. So targeting 12 points to 8 points. So, Or maybe we're targeting this imbalance, because this one is yet to be filled. Ooh, that's another thing that I learned in the thing. Fuck, I need to watch the take profits video. Or the stop loss video. It wants to seek X. Does price fill internal, then fill internal, then have to fill internal again, then seek external? We just saw that all the time on the 4 hour. It just fills internal, then inverses internal, right? Fills into. We just saw that a million times. It would fill an internal, draw it out. Oh shit! Cancel, 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 cancel. Discard that. We're not doing that. We just saw that like 16 times on the fucking 4 hour, right? Price would come up, form a fair value gap, fill it, right? Then form a fair value gap. Then wait, no. What am I thinking here? Right? 1 and 2. So let's say we have something like this, right? Let's say we have a fair value gap way down here, it doesn't get filled. Way up here, right? Price would, shit, hold on. Let's say we have a fair, okay, hold on. We can do this. Let's say we have, let's draw it exactly what we have, right? Fair value gap to go down, forming one, and then coming back into that zone. Okay, perfect. So fair value gap here, made on a downtrend. Price comes up, makes one right here, fills this imbalance, right? Now, now that we filled this imbalance, do we target external liquidity or do we target this imbalance? Because this one gets respected and goes up. Then, if this fair value gets respected, can we proceed? We would still need to see an inverse. We would need to see a fair value gap here being made on the way down to fill this imbalance. And then we would need to see this one get inversed, and then we can proceed. That's what I'm thinking. Let's just stick for what we have on the table at a time. How about that? That makes sense to me. I'm quite exhausted, but I will see what happens when this works. Whoops, that's me editing the video.